I'm Matt Bouchard with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me today is Mark Decker, Vice Chair of BMO Capital Markets. Mark, thanks so much for joining us.
It's a pleasure to be here, Matt.
Now, Mark, you were head of NAREIT during the passage of the 1986 Tax Reform Act. And once again, comprehensive tax reform seems to be all the rage and a lot of discussion about it in Washington. How would you compare the conditions for passing that type of legislation today versus 30 years ago?
The REIT vehicle was not very well known, not very strong, not well established. Congress and the regulators viewed it as a passive flow-through, which we changed in '86 to allow REITs to manage their own properties, which, believe it or not, from 1960 to 1985 they could not. We also marketed ourselves off the death of tax shelter partnerships, which investors got $2, $3, $4, sometimes $6 write-off for every dollar they invested in a partnership, which created a lot of the overbuilding in Texas, and it was really a real estate-driven problem in the mid-'80s. Today, the real estate industry is very healthy. But those tax shelter partnerships were killed by Congress, and we explained how the real estate industry leaders would turn somewhat to our vehicle, and that we needed to modernize it. So, it was a very good argument to make, and I think the boom and bust history of real estate in the mid-'80s has changed a lot. The public markets have really helped smooth the markets, so there's less sort of rumor-driven boom-bust associated with it.
Now, the REIT IPO market this year has really sort of stagnated. Why do you think that is, and is there any expectations for it to open back up?
It's a cost of capital business, very capital intensive. We all say money's free today. It's not, but it's very cheap. So instead of having a shakeout of owner-operators with interest rates moving up and the inability to reprice these properties, you still have a lot of people in. It's kind of like watching a slow train wreck. And I know people are still talking very confidently about the economy, but I think we're in a king has no clothes world here. And as long as you keep the cap on sort of natural forces, it's kept a lot of people in the game, a lot of real estate that didn't get repriced, revalued, that should have been bought and sold by now. And the other thing about the IPO market is in the mid-'80s, it was pretty much done out of Washington. We didn't have a lot of grassroots presence in the political districts, small number of equity REITs. The markets collapsed in the '70s. The industry had a bad reputation. Today we've got a lot of grassroots capability.
And lastly, are there any underreported storylines in the REIT space that you're keeping an eye on for the next 6 months?
I think it's underfollowed that there are a lot of smaller, really well-run companies that aren't getting capital to take that leap into the public markets. And I've always thought of it like Weyerhaeuser, the tree growing company. They cut trees down and turn them into paper and pulp, but they grow trees. So I like the idea of a healthy public market for smaller companies that can be grown, and 1 out of 10 makes it through the gauntlet and becomes a really high quality REIT. The other 9 build a nice portfolio and maybe get acquired. It's a great opportunity for the healthier REITs. So I think we're missing those. The institutions just won't buy those, and the small retail-only IPOs have really not done well in terms of trading and liquidity. So the institutional market, now maybe the GIC, maybe that'll trigger some defined contribution money that'll come. But it's a need for capital for these high-quality small companies. I'm not sure a lot of other people other than me care about that, but I've seen it really help grow the early part of the industry, and I like the idea of being able to bring some of these smaller companies into the market.
Well, Mark, thank you so much for joining us.
My pleasure, Matt. Thank you.
For more from REITweek 2016, be sure to visit REIT.com.